Learn the secrets behind Warren Buffett's financial success. Join us as we explore the 5 key principles that propelled him to the top, including value investing and economic moats. Follow his blueprint to achieve financial success. Value investing is a strategy for finding undervalued stocks. Warren Buffett advocates this approach and emphasizes determining a stock's true worth in relation to its market price. He looks for companies with strong fundamentals to hold for the long term, as opposed to following trends. His philosophy is encapsulated in the quote, "It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price." Buffett identifies undervalued stocks by analyzing a company's finances, management quality, and growth potential. He looks for businesses with sustainable competitive advantages, known as economic moats, that can withstand economic storms and remain successful over time. This approach ensures that his investments are grounded in the real, tangible value of the underlying businesses. Coca-Cola is a classic example of a Buffett investment. In the 1980s, he analyzed the market and made significant profits from his investments. American Express is another example where Buffett invested and made substantial profits. These examples demonstrate how Buffett's value investing approach has resulted in remarkable success over the years. In the investing world, patience is not just a virtue, it's a strategy, and Warren Buffett is its champion. Instead of seeking quick wins, Buffett focuses on the long game. And here's why it matters. Buffett believes in holding on to investments for a really long time. It's like planting a tree. You water it, nurture it, and let it grow into something substantial. He's not after instant gains, but aims for lasting, substantial ones. Imagine your money-making assets making more assets. That's how compounding works. Warren Buffett's investment strategy involves compounding, that is, letting his investments grow over time, making more money like a financial snowball. He invests in solid, reliable companies that he calls forever stocks and which he plans to own indefinitely. This patient approach aligns with his belief that patience pays off big time. Take See's Candies. Buffett bought it in 1972 and never let go. The sweet deal got even sweeter over the years. Another example is Wells Fargo. Buffett invested in it back in 1989 and stuck with it. By staying patient, he turned these investments into gold mines. So, when it comes to Warren Buffett's second secret, it's all about having patience. The longer you wait, the more fruitful it becomes. Warren Buffett uses the concept of economic moats to protect companies from competitors. An economic moat is a competitive advantage that sets a company apart and makes it difficult for others to replicate its success. Examples could be a strong brand, unique technology, or exclusive licenses. Buffett doesn't want a one-time advantage. He wants something that lasts. He seeks companies with sustainable competitive advantages. These are the kind of advantages that don't fade away quickly and keep the competition scratching their heads. In Buffett's world, economic moats are the superheroes of investing. They protect companies and, in turn, the investor's wallet. So the next time you think about investing, consider companies with moats. They're the knights in shining armor of the financial world. Let's talk about his fourth secret, playing it safe with conservative financing and having a cushion with a margin of safety. Imagine you're building a house. You don't want to rely on shaky materials, right? Buffett feels the same about businesses. He looks for companies with solid financial structures, not those living on the edge of a financial cliff. Conservative financing means a business isn't drowning in debt. It's got a sturdy financial foundation. Now, what if your house had a little extra room in case of unexpected guests? That's the idea behind Buffett's margin of safety. It's like having a financial cushion, a buffer for when things don't go as planned. Buffett wants a bit of extra room between the real value of a company and its stock price. This way, if things take a downturn, there's a safety net. Conservative financing and margin of safety are like the seatbelt and airbag of investing. They're precautions to minimize risks. Buffett doesn't want to bet everything on a sure thing. He wants to make sure he's prepared for the unexpected. It's a way of saying, even if things don't go perfectly, I'll be just fine. Think about the 2008 financial crisis, a tough time for many. Buffett's Berkshire Hathaway had a strong financial position, allowing him to make bold moves when others were struggling. This financial strength acted as a shield during the storm. So, when Buffett talks about playing it safe, he's not being overly cautious. He's being smart. Conservative financing and a margin of safety are his secret weapons for weathering financial storms and coming out on top. Warren Buffett's fifth secret to investing success is to embrace continuous learning. Despite being an expert in finance, he never stops being a student and reads extensively on various topics. His idea is that the more you know, the better decisions you can make. Markets are constantly changing. Buffett adapts to the times and doesn't shy away from new developments. When the internet changed how businesses operate, he learned about tech companies and adjusted his strategies. Staying informed and adapting to the times is his secret sauce. To invest like Warren Buffett, make learning a habit. Read, follow industry news, and diversify your knowledge. Set aside time each day to learn, join investment forums, and consistently add to your knowledge over time. This way, you'll make informed investment decisions and grow your wealth like Buffett. Investing without knowledge can be risky. Warren Buffett's success comes from his commitment to continuous learning and adaptation. To follow in his footsteps, you should also be a perpetual learner. The more you know, the more your money can grow. Buffett's 5 secrets to investment success, which include value investing, long-term thinking, building economic moats, conservative financing, and continuous learning, are accessible to anyone who has a desire to learn, not just the financial elite. Simple yet profound guidelines can shape the journey of every investor. Understand the importance of value, patience, strategic protection, financial prudence, and perpetual learning to navigate investments confidently. Remember, Warren Buffett's wisdom is not just for the wealthy. Anyone can achieve financial success by embracing his principles. By using them as your guide, you can sculpt a prosperous financial future. May your investments flourish and your wealth grow with Buffett's sage strategies. Don't forget to hit that subscribe button to receive future updates. Bye for now.